Innovating in Time of Crisis, sponsored by Lloyds Banking Group. My name is Sofia De Francesco and I'm the Head of Content at the APA. Before we get started, I'd like to go over a few items so you know how to participate in today's webinar. You will have the opportunity to submit text questions during today's webinar and to the speakers. Typing your question into the Q&A tab of the control panel. You may send in your question at any time during the presentation. We will address them during the Q&A session at the end of today's presentation. You may ask this question anonymously if you do not want your name attached to the question. If you have any logistical question or any technical issues, feel free to send a message through the chat box to Amy Page from the EPA, who would be on hand to answer any queries. So without further ado, I'd like to introduce Tony Craddock, Director General at the Emerging Payments Association, who will be chairing the webinars today. Over to you, Tony.
Thank you very much indeed, Sophia, and welcome to the briefing from the EPA, hosted by Lloyds Banking Group. I'm the DG of the place where passionate payments people come together to meet, to share insight, do business and have fun. And I'm excited to be here because despite it being mid-pandemic and with temperatures outside of just above zero, it's been an amazing start to 2021. In our industry, the post-Brexit business bonanza has begun with a boom in investment in fintechs, for example. 20% of 2020's investments have been made in the first 2 weeks of 2021, and also rapid growth in the number of faster payments transactions, digital transactions up 20% year on year. We're seeing new companies, new products, and new EPA members on the scene, for which they're very welcome. And we're seeing record levels of engagements too. And this webinar has almost 600 people registered to attend, which is double our previous record. And the registration rate for our Pay 360 conference in March is running at 3 times the pace of last year. So this is all really good stuff in the background. As you'll all know, that as well as the EPA driving an ambitious policy agenda, we run 50 events each year. And this briefing, this webinar, is hosted by Lloyds Banking Group, and it's setting out to provide you with some thought-provoking and opinion-forming content. So you'll leave in 90 minutes or so with some ideas, some insights, and hopefully some inspiration. So we're going to start with a fact-filled 20-minute presentation on the state of play of Covid-19, the impacts and resultant fintech collaborations, followed by a 60-minute panel session with representatives from Lloyds, Easy Collect, and QuickServe, and there'll be a Q&A involved with that as well. And so, who better to provide you with fuel for your tank, or should I say, in this era of sustainable everything, a power for your battery, than a big fan of the EPA community to talk about the state of play and its impacts on and resultant fintech collaborations with the head of product payments from Lloyds Banking Group, who has, I must say, recovered amazingly swiftly from his haggis and scotch at Burns Night last night, Gavin McLean. Gavin, a very big welcome to you.
Thank you, Tony. Thanks for that, as ever, warm and energetic introduction. I'm just going to share my screen and get some content on the page for you. So, hopefully, everyone can see that now.
Yes.
Do drop me a comment. Thank you, Sophia. So, hi, yes, Gavin McLean. Yeah, as you can tell from the voice, Scotsman, Scotch lover, but also head of the payment product team here at Lloyds. I'm a lifelong payment geek, and hopefully that makes me ideally placed to set the context for today's event. We're going to be looking back on an unprecedented year in business and in payments. Some impressive innovation that took place despite the challenges, and we'll then have a panel session hearing from some of those innovators. We're going to look at some significant and potentially long-lasting migration effects between different payment types, And also I'll share with you the views of some Lloyds customers about their plans for payments in 2021 and beyond. And that will hopefully then put us in the right frame of mind for the panel session that's going to follow. Also, as a Lloyds presentation, we are in no way too precious to acknowledge the contribution of others in the market. So we will touch on, things that have been done by competitors, by fintechs, by partners, by regulators and others. And that's the best way for us to sort of take stock and then look ahead. So what a year it has been. If I can just move this slide on. But as you look at 2020, it's important to note that actually it's been busy for payments for at least the last decade. At Lloyds, we've long seen the trio of progressive regulation, improving technology, and global trends in consumer behaviour combining as catalysts for innovation and payments. 2020 was going to be a busy year anyway for payment service providers, for regulators, for banks and other stakeholders, long before the challenges of the pandemic. Despite that, consumer expectations were going to continue to rise. They were going to demand more of payment journeys. Technology like APIs, application program interfaces, would enable new possibilities, and regulation would continue to promote competition and prioritise end users' needs. Of course, during 2020, some of those priorities had to take a bit of a back seat because of more pressing needs. But despite that, actually, many of them did progress. So in addition to some of those planned developments, look, from the top left of this slide, society got used to social distancing. Huge numbers of people on furlough or home working or a bit of both. And of course, the dramatic switch to digital in many aspects of our lives. On the right-hand side, payment journeys like paying by QR code shot to prominence as an enabler of socially distanced payments. And down in the bottom right, the industry came together. Thankfully, the payment industry, as ever in times of stress and crisis, came together to do things like increasing the contactless limit, increasing limits on online banking payments, and other things to reduce that point of sale contact and self-serve respectively. And in the bottom left, probably one of the highlights of 2020 for me was that open banking payments, after a fairly uninspiring start the year before, finally became mainstream. Whatever the cause of that, crisis or just natural maturity, we're now seeing at Lloyds payment volumes double every 8 to 10 weeks on. So some unexpected firsts on top of what already going to be a busy year. And actually, before I now take into some of the payment trends, just for context, I just wanted to say, when I mentioned the open banking payment growth that Lloyds has seen, I'm going to talk about some other payment statistics from our analysis. Lloyds processes about 1 in 3 of every payment in the UK, every account-to-account payment. So, our figures are broadly representative of what's going on in the rest of the economy. So, as an EPA member, getting to see this snapshot of what Lloyds is seeing, I think you can take comfort that this is what's happening right across the payments market. So what did we see? Well, if you look at the period March last year to this year, first of all, the dotted line represents the normal average level for each payment type. And then the coloured lines show how those respective payment types fared from March through until now. So during the early stages of lockdown, you can see that cash and checks, those physical payments, were down by as much as 50 to 60%. All payment types took a hit in that initial period, but electronic payments like chaps and faster payments were actually fairly relatively more resilient throughout the period. Card was the sort of awkward middle child in the family, having aspects of physical attributes and of course electronic attributes where it's used in the e-commerce or online world, and it suffered a hit of about 30% initially before making a fairly steady recovery right through the summer and into the autumn. And as you can see in October time, our card volumes were back to broadly pre-lockdown, pre-crisis levels. So we've got a bit more on that over the page on the next slide. So actually we can see when you look at this slightly zoomed in view that the payment trends very closely correlate to public health measures. If we look at the few weeks around the lockdown to September, in the top half, we can see those initial large falls. We can see pretty rapid recovery actually in the electronic payment types. We can see card doing really well. We can see even cash by early September getting back towards its pre-crisis levels, and cheques, sadly, having been the cheques product manager at more than one bank, languishing, you know, and it's never got back to its previous levels. But then when we look in the lower half, when we look towards August, and when we see non-essential shops and restaurants and pubs and hairdressers reopen, actually we can see that cards have significantly recovered versus those physical payment types, which are still, you know, having made a recovery, you know, they're still below the average that they had seen. And actually, our data suggests that this was really happening because of a couple of things. One, that high street retail and hospitality adopted policies of preferring payment by card and contactless versus cash, sorry. And actually you can see that if you go into most stores today. And actually the significant rise in e-commerce and remote commerce, you know, from groceries to takeaways, home delivery, pre-ordering, click and collect services, they're all driving digital payments, particularly card. Now, after we had help out to eat out and, you know, those heady days of late summer, governments realised that we had been helping out and going out a bit too much, and we prepared for circuit breakers and regional restrictions and tiers and, you know, all of that sort of stuff. Whatever you call it, there was a very interesting difference with what happened with the payment volumes in that second lockdown in November and December. Businesses had arguably gained experience and a degree of resilience in their payment practices from the March lockdown. You know, those e-commerce and click and collect and QR codes and all those other sort of crisis-inspired innovations and changes were called on again. And the result was that we saw digital payments not nosediving nearly as far as they had fallen in March. Yes, they fell, but nowhere near as far. And that was an indication that people had got used to digital and social distancing over the period. And now, actually, many of those will have converted from analog to digital, from cash to card, from in-store to online, and might not come back again. And if we go on to the final figures, and this is looking at the latest lockdown since Boxing Day and right up to Friday, we've pulled the very, very latest figures from the bank systems. But you can see when that lockdown was imposed again, we can see that familiar immediate reduction in payment activity. But when you compare it to the previous lockdowns or the tiered restrictions, actually what we're seeing in the early weeks of 2021 is that this time looks much more like the moderate declines that we saw with the November restrictions than those sharp drops that we saw last March. And bucking the trend is Chaps, which has had a bit of a boost over the period as a whole, really. And when we've looked into those figures in more detail, this is largely driven by solicitor Chaps payments. So this is the housing market buoyed by the stamp duty holiday that the Treasury gave us, and people appear to be looking to get those purchase transactions completed before the end of this holiday in March. So that explains the slight anomaly of why the heck is Chaps doing so well. On the broader reductions that we've seen in January, in the early part of this year, there's a few ways we can look at that, but the main things are probably either, if you look on the optimistic, you know, that British spirit, business resilience, reliable payment services is leading to less of a reduction. We're just getting more used to it. We're better prepared, and the falls are less dramatic. The other way, the less positive way to look at it, is perhaps that payment activity is simply a function of how harsh lockdown measures are. You know, we saw the biggest impacts on payment volumes with the March lockdown, which was of course a full lockdown, less of an impact in November, and then January with slightly bigger declines, but not as bad as March. So the worry there is that if that is the case, and governments and devolved administrations are minded to tighten restrictions further, then actually we could see further impacts on our payment activity. I said at the start, I'm a payment geek. I'm also a payment geek with a terrible record of getting predictions right. So when we come to think about what might happen in the future, I've decided to take the easy way out and simply refer to some surveying and analysis that we did with our customers. So taken from a survey of about just over 600 Lloyds customers during mid to late 2020, about half expect to reduce further or stop handling cash. A similar number say that about cheques as well. Around about a third expect to start or to increase the acceptance of card payments. And a similar number expect more digital payments when getting paid. About 35% expect more digital payments when paying others. Now, that's mainly business-to-business payments, purchase ledger and paying for goods and supplies and stock and inventory. But actually, it's very, very interesting that even in that business-to-business context, we're seeing similar expectations in terms of the shifts as we are in consumer businesses. So our data suggests that these 2020 shifts could be here to stay, and as some of our customer feedback suggests, many businesses feel the same too. During 2020, during these weird and troubled times, a really pleasing aspect for me being involved in payment product and payment innovation has actually been to see the acceleration of innovation and partnerships between firms in the payment space. I think it's something as an industry we do brilliantly, and I know Tony would agree with that and promote that also. But you know, when in times of stress, excuse me, the payments industry can generally be relied on to come together and make its contribution. And I think that's definitely been the case in 2020 with partnerships and innovation within payments. Companies coming together to solve some of those problems of the pandemic, or indeed to seize some of the opportunities that come out of that adversity. Sorry. Not only do I think we should be impressed by the industry's ability to conceive new innovations, but also its proven ability to deliver new products and services, to launch things, while often having no staff in offices. Most of us, like I guess we are here today, spent big chunks of 2020 battling other challenges at home, in our kitchens, our dining rooms, and our bedrooms, as well as occasionally trying to get a bit of work done in between. So hats off to all of you and to everyone who managed to survive through that period, and to the many who are thriving in that environment as well. At Lloyds, we've been lucky to step up our innovation and our partnering during the course of 2020. That's led us to upgrade, to build, to launch new services regularly during the pandemic. And that ranges from relatively small changes, like increasing limits on digital banking, to launching entirely new services, such as open banking payments. I mentioned open banking coming to prominence, becoming mainstream. And actually, we're working on that at Lloyds as well. So we have a couple of examples in this area where we have created and launched open banking services. So we've actually partnered, back to that point about innovation coming out of the crisis. We've partnered with Bottomline and MasterCard. Tony, you'll be glad to hear, both EPA members, to launch Fund By and Pay From. And these are payment acceptance solutions based on the open banking rails. They're both full open banking payment initiation services. Fund By, we're initially aiming at clients who need their customers to move their money to a different product. So for example, moving money from their savings account to, from their current account to a savings account, or an ISA, or a share dealing account, or a credit card. And Pay From, we're aiming at clients who want to let their customers pay for goods and services. So not necessarily just move their own money, but actually pay for things like concert tickets or hotel bookings or a utility bill. And many of you will be familiar with the open banking journey and the way that payment acceptance happens. So I won't drain the bottom part of the slide, and I've got some screenshots over the page as well. But the most interesting thing is that these are solutions that we have built in partnership with those two technology organisations and payment providers in their own right. So these are not conceived and built at Lloyds, but done so with our partners. These are what the screen flows sort of look like. I'm sure you're familiar. Actually, what's interesting is that the first client that we've onboarded to this is actually one of our own brands. So we're using this to allow our Bank of Scotland credit card customers to make payments towards their credit card balance using this solution. And we've got a number of wealth management and other clients in the pipeline and onboarding to be able to offer this. And I think that's important. I was, in my personal experience over the last few weeks, the number of things that I've been able to do using open banking has really ramped up. So, paying off, I'll name them, your Tesco Bank credit card, topping up your Monzo account, making a donation to a charity platform, all of that has been done using this kind of 4-click, 4-press process that open banking enables. But actually, we are not stopping there at Lloyds. We have a dedicated team who work on partnering with fintechs, and we're working with organisations large and small to enhance our payment services for our clients. So we very much are innovating. We continue to innovate as this crisis goes on. And I can tell you, I mentioned a nod to our competitors. They're doing the same as well. So what's really pleasing, as you sort of take the industry view on this, is that lots of innovation, lots of creativity, lots of possibility is emerging out of the troubled times that we've just been through. I've got a wheel here that shows some of the firms that we're partnering with. A couple of them you're going to hear from today, and we're working on things like open banking, like instant payments, like confirmation of payee services, direct debit collections, payments by QR code. All of the areas that we see emerging and growing out of the troubles that we've had over the last year or so. We are pleased to say we've got activity decked against all of that. So hopefully, with the statistics and my assertion that innovation is still happening, that's given you some reminders to take stock as we look back at 2020, which I think will be a long time in the memory. And with the benefit of those payment trends insight, it's kind of got you thinking about how these events will impact upon innovation now and in the future, and indeed what possibilities that's going to open up. So we're going to offer up the opportunity for some questions just now. Then I'm going to hand back to Tony, and then we're going to move on to take the panel session and the Q&A. So I've got some questions that have come in via the panel, from you guys in the audience, and they've just come through on my little tab. So I'll try and just describe them. So somebody's asked, what were the volumes of these payment methods versus the change percentages described? So if I take you back to that slide, just to be clear, that figure of 0% is what we would normally expect to see on each of those payment types. Backs, chaps, faster payments, cards, cash, checks. Our chaps volumes would typically be in the hundreds of thousands a week. The faster payments would typically be in the millions. Cash transactions, so cash transactional footfall would be in the millions. Cards would be in the tens of millions a week, and checks would be over a month, typically about 400,000 or 500,000 pay-in checks amongst our business customers. So ranges from the tens of thousands right up into the million. But the important thing is that the lines on the graph indicate how much they've moved from the norm. We've got a question here. Have we noticed any change in consumer card SEPA payments in January, in and out of the EU? More Brexit than COVID, but also a crisis. Well, it depends on your point of view there, Tony. The short answer is I can speak very well for payments, and the answer is yes, on a small scale. We have seen a small number of banks on payments that we are sending into Europe have introduced charges for accepting those payments that when the UK was part of the EU, under payment services regulation, those charges wouldn't have been taken. So what that generally means, Tony, is that the beneficiary doesn't receive the full amount they'll receive the amount minus a charge, maybe €5 or €6 from the receiving bank. So from what we can see it's on around about 5 or 6 banks, mainly on payments that are going to Spain, Ireland, Austria, and the Czech Republic. And I saw in the newspapers and the BBC yesterday that interchange fees for UK cardholders paying an EU merchant were reverting to what I would describe as the rest of the world method. So I think that's a very similar phenomenon to what we've seen on those payments that we are sending cross-border into Europe, Tony. That now that the UK is, as a matter of fact, not in the EU, we may start to see more of those payments being treated like payments that are arriving in the EU from other non-EU places like North America, Asia, and other places. Robert has said, Jamie Dimon at JP Morgan has said, digital payments is the battleground for banks to survive and prosper over the next years. Would the panel agree? I will allow the panel to pick that up. The short answer is yes. It is a board level discussion at Lloyds Banking Group. I'm sure that could also be the case at many of the large banks in the UK, but it's certainly one of the areas. You know, Tony mentioned it in his introduction, huge amount of capital being invested into payment businesses. That would suggest there's opportunity there. It would be a mistake, in my view, not to very, very seriously consider payments as a growth opportunity, or indeed a battleground. Whether it's an existential battle, I don't know, but it's certainly a very, very big priority. Does the bank foresee the end of cheques as originally planned, or the continuing support for this payment method? Actually, Craig, I think that's a really, really good question. I think long and hard about the future of cheques and also the role of cash in our society. You know, I heard on the radio this morning people talking about 2020 having compressed 5 years worth of retail shopping migration into 1 year. I think very, very similarly about cash and cheques. You know, cash and cheques have been in decline for at least the last 7 or 8 years that I can remember. I think that will continue. I think it's been accelerated, but I think that's a great question for our panel to try and tackle. So if you don't mind, along with some of the others, I'm going to leave those out there for the panel. And any insight to the time of day and out of hours, weekend use patterns of faster payment service since March? Nothing that springs to mind particularly on that's happened in the last year, Jeremy. Generally, what we find is that there is a background level of consumer to consumer instant payments, faster payments in the UK. And those then get topped up by businesses who carry out a lot of transactions on the weekend. So gig economy workers, recruitment agencies, temporary staffing agencies all tend to have higher than the normal levels of faster payments on weekends compared to the rest of us and compared to most businesses. But I can't say we've seen that trend significantly shift since we started tracking this data in March at the start of the crisis. And Josh is asking, how have we evolved propositions to account for the increased risk of financial exclusion caused by the pandemic. I think a number of the things that we've done to enable self-service on our digital apps, but also importantly, working hard to keep as many of the branches open as we possibly can. So for vulnerable and for excluded communities to be able to access those branches is really important, especially when they're facing increased uncertainty and potential higher levels of vulnerability. So, we've had calling campaigns within our branches, contacting the local community, checking in on customers, making sure that we're offering all the support that we can. So I think there's been a genuine intent to try and reach out and try and look after those vulnerable communities over the last year. And I think we've got a lot of questions here about what are the plans for open banking, what's going on with payment volumes. I think you've heard me talk for more than long enough. I think what we'll do now is hand back to Tony and then move swiftly on to the panel session. So thank you all very much for listening. I hope you found that in some ways insightful. Thank you.
Thank you very much indeed, Gavin. Terrific presentation. As I said, lots of facts, but also some great stories as well. So thank you. What I'm most reassured about is to see how we're not only seeing what seems to be a permanent shift towards digital banking, as you say, accelerated 1 year in five, but also very specific examples of collaborations. And I do wonder which comes first, the innovation or the collaboration. It'll be interesting for the panel to discuss that. I'd encourage everybody, by the way, who hasn't been using open banking as a practitioner to start to use it. And you'll see sometimes it's amazing, 2, 3, 4-click process that you've got there, and sometimes it's a bit clunky, but that's what happens with early technologies. Use it, engage with it. It's great to see after all these years it's actually happening. So I'm now going to pass over to the host for our next panel. Una is the Director of Propositions Development at Lloyds Banking Group, and she has a fiery panel to present some sessions for you, some insights for you. So over to you, Una.
Thank you, Tony. Welcome to our panel session, where our expert panel will be going through their thoughts on the value of partnership, talking about some COVID-19 responses and how they've enhanced client propositions and what we might see in 2021. And we'll hopefully shine a bit of light on two of the partnerships Gavin mentioned earlier, so Easy Collect and Quick Serve. So without further ado, I'm delighted to introduce our panel. We have Andy Stolzberg, founder and CEO of Easy Collect. We have Steve Hawkins, the Director of Alliances at Quick Serve. And on the Lloyds Bank side, we have Georgie Brennan, Associate Director at Payables and Receivables within our client product team. And we have Izzy Abdurrahman, Director also on the Payables and Receivables side. So welcome and thank you for joining us. So Andy, if I can come to you first, if you could give us an overview of the Easy Collect Lloyds partnership, delivering and enabling direct debits to SME, and share with us what sort of capability that opens up to the UK market.
Thank you. Welcome. Good afternoon, everybody. Yes, I think direct debit kind of gets the tag that it just had its 50-year birthday, and Gavin and I, as he mentioned, we're both been sort of payment geeks and probably 20+ years now. But it's probably fair to say as direct debit, even as it has evolved and became more readily available to more types of businesses, it really has mostly been only available and enabled for sort of UK PLC and large corporates across the UK. And so, it really, in the sort of trend of where everything is going in terms of the payment systems regulator and Pay.UK, it really is about trying to maybe reduce the barriers and enable smaller SME types of businesses to have the capability. It is a proven successful payment method. There's over, I think one of the questions about the actual volumes, there's over 4.5 billion DD transactions processed per year. So it's still working pretty darn good, thank you very much. But, you know, it still is underserved in those SME areas. And so, you know, I think it goes back a couple years ago now that Gavin and I got together and you know, certainly with the onset of disruptor banks and fintechs coming in, Lloyds, of course, being a well-established high street bank, you know, what could we do to enable and empower and perhaps help those SME businesses utilize direct debit? And so, you know, with their business models and sort of the subscription type of a model becoming more prevalent and so forth, how we could help them. And so, you know, Lloyds, I think would probably admit, and along Gavin's team, that, you know, it's difficult with their relationship managers across the country to be able to dive in and truly support some of the smaller businesses, scope out their requirements and that type of thing, and be able to be nimble enough and offer it. And also there is that credit risk concern as a result of the direct debit guarantee. And so, you know, Easy Collect, we've been around for 20 years. We're adept at managing risk, and our sweet spot, as well as the company Access that acquired us, has always been SME businesses. And, you know, we've been focused on somehow striking the right balance of managing the risk, but enabling them to collect direct debits using our services. And so I think Gavin, you know, of course, recognized that opportunity to forge a partnership that would be mutually beneficial for both of us. And, you know, that's what we sort of set out to do. And really the whole idea is, like we said, it's to open up the doors for many of these businesses and organizations that traditionally just didn't have the ability to be accepted by sponsoring banks on the high street for direct debit.
Thank you. And Izzy, you obviously work closely with Andy on this on the Lloyds Bank side. What was the client benefit that you were trying to best achieve? I think we've lost the sound there. Izzy, what was the client benefit that you were best trying to?
Can you hear me now?
Yep, you're great. You're back.
Ah, brilliant. Oh God, I was chatting away there. I was just saying, Andy mentioned one of the kind of key points right at the start of his answer, which was making direct debit collection services available to the smaller SME businesses, which is typically limited to larger organizations in the direct debit space usually. So what we found with these much smaller organizations that require the need to collect regular and reoccurring payments is that they're using more manual methods at present, which is, you know, the acceptance of cash and check, card payments, or even standing orders. So trying to streamline that process and automate it for them and giving them the opportunity to collect direct debits not only is a more reliable way for them to collect these payments and reduce sort of poor collection rates, it's in some cases more cost efficient, so a cheaper option than accepting card payments. It's easier to reconcile payments using the sort of cloud-based reporting system that Easy Collect offers. So there's a number of benefits, but I think the greatest is just being able to offer this direct debit collection service to our much smaller businesses, which we weren't able to do before our partnership with Easy Collect.
Thanks. And Steve, if I may come to you next, if you could give us an overview of the QuickServe partnership with Lloyds and share the capability that has been realised already, and maybe share some light on how you think that has evolved.
Yeah, sure. So QuickServe is and welcome everybody. QuickServe is a provider of self-service order and pay solutions. So the capability that has been realized is that combined solution. So for merchant venues, this is the quick serve digital ordering combined with the fully integrated payment services that Lloyds CardNet provide. So coupled together, we provide branded digital journeys for consumers to order and pay for food and beverage, either on a mobile device or online. Though that platform and those services, as QuickServe evolved and with the development of Lloyd's payment services, we've expanded those out, those platforms out, and those combined digital journeys from the traditional off-premise pre-ordering, so the traditional click and collect and delivery, to on-premise experiences. So when the restrictions are finally relaxed, we'll be able to provide services like to-table ordering and pay at table and kiosk type solutions.
Thank you. Georgie, again, worked very closely with Steve on this from the Lloyds Banking side. How has the journey influenced your product set or client proposition, and what is your take on the evolution that Steve has alluded to there?
Thanks, Una. Afternoon, everyone. First and foremost, CardNet's approach to our product set is always focused on offering more choice, more value, and more solutions for our merchants. And the ability to provide merchants with functionality and capability to support their changing business requirements beyond simply taking card payments is key for the future of our business, and also reflects the ever-changing landscape of card acceptance, which Gavin has highlighted is never more so accelerating. And partnering with QuickServe has allowed us to innovate with a best-in-class provider for the functionality that really supports businesses at this current time. And in partnering, we've introduced this to our proposition in a really, really timely fashion. And as Steve mentioned, COVID really highlighted the strengths of QuickServe's solution, enabling businesses to operate in a new way with the right level of support as well as at pace.
Thank you. And Andy, if I come back to you, we have seen obviously a significant change in client behaviour, and Georgie has talked there to some of the responses to the COVID-19 environment that we've seen. Some client propositions have also seen a dramatic take-up, but not necessarily in the ways that you would expect. Can you talk us through a little bit of your experience with Control My Payment?
Yes, it was kind of a crazy thing, really. Obviously, everybody knows with COVID, things were moving very quickly, and it was such a dramatic sort of event that hit us all. But we had a product called Control My Payment that our sort of access development team had been working on, primarily for our non-for-profit sector. And this was really to better engage with the end customers or the direct debit payers, to have the tools themselves to use our system to sort of amend the value of the direct debit, pause a payment, change the date, update their details, sort of what you'd expect from a normal engagement tool that with an end customer. And so it was something that we didn't really have fully up to live, but once COVID came upon us, it's one of those things that we said, let's see if we can get this to live. Let's get this bolted onto our existing services. And get that out there. And so it was quite dramatic. We had really a couple sort of clients that were sort of just trialing it out, and it went from 2 to 60 very quickly. And so there's a real take up, obviously a very big need to engage with their customer bases. But what we expected, in the state of COVID, that people would use the tool to perhaps cancel their direct debit payment, their donation, or pause it or decrease it. What was quite remarkable is that out of all the tools, updating data, next collection date, push, cancellation, so 51% actually made changes to their direct debit, and 86% in fact actually increased the DD value. So it was really just completely unexpected, really, and maybe it was just the mindset and the ethos that people had towards giving during this particular sort of crisis. But only 1% canceled their direct debit. 21% did push it to the next month. But really, it was just a quite an unbelievable, not what we expected at all. But I think it goes to show you, when you provide a tool that gives a little flexibility, engages with your customer. We thought it was just going to be something that was going to help our clients, but clearly it did a lot more than that and ended up actually increasing the values and the transactions that were coming through. So it was a welcome benefit, really.
A really interesting client response. Steve, if I could pass over to you, and much on the same note, often solutions that you might develop are looking at one industry or one segment, but then are readily adopted by others. And as we've seen, some of the themes that you're looking at, order and pay, covers a number of industries and segments. Can you describe the journey from focusing on maybe initially on hospitality and how you think your solutions may be useful to other industries, particularly as you alluded to, as we slowly creep out of our third lockdown?
Yeah, absolutely, sure. And to your point, I think it's clear that a lot of other industries have been watching very closely the hospitality market and taking note of the technologies that we've been implementing, and are now looking to the future to determine the best course of action. So if I use, I think the best way is use tier restrictions as a guide to a business strategic focus, for instance. So in those high tiers, the focus is on digital connection and delivery, allowing businesses to accept as many orders as possible. So they do as much as they can. So those collection, delivery, drive-through, curbside journeys, our platforms are able to support the maximizing of those slot times, the maximizing of those deliveries, and throttling of the operations capacity to provide those services. So that's the technology optimization. But also, as restrictions begin to decline, so the lower tier sections, and businesses open up, then the strategic focus shifts to supporting social distance, and as Gavin said, reduction in those touch points in an on-premise environment where businesses will want to own their own brand channel to support the contactless table ordering combined with a contactless payment. So these digital technology solutions, which are providing these operational efficiencies both in a off-premise and on-premise environment, are also very applicable to other industries to maximize the way that they look at their efficiencies and their operations. And we've certainly seen a number of sectors cashing in on those types of technology benefits. Anything from pubs, bars, hotels, theme parks, train operators, leisure resorts. Last week we had our first trampoline customer onboarding, but a year ago, absolutely unheard of this technology in these verticals.
Fantastic. And Steve, how do you see, I think that's a really good example as in response to the tiers and as we open up, but how do you see a client needs continuing to evolve, and how do you expect to respond to that?
Yeah, as Gavin alluded to at the very beginning, that the last year has had quite a profound effect on how we manage our developments within our business. But firstly, we invite open feedback from all of our clients, and what they tell us has a huge role to play in the roadmap of our technology as we develop it out. As an example of that, curbside collection was developed in a 48-hour period as a direct response to client requests at the start of the Covid-19 pandemic. But we also are starting to experience a number of brands wanting to see their own branded platforms alongside the traditional aggregators. But with multiple order screens in a kitchen, it becomes a productivity nightmare for managers. So they want ways of streamlining the platforms, but also sharing the data automatically across these and other integrated platforms. The data, as I alluded to there, is actually more important than ever. Understanding your customers and those data insights will obviously lead to better customer engagement and loyalty. And in a time when, fair to say, consumers can be quite fickle, this is really essential for you to get some brand exposure and keep those customers loyal. So I think as the propositions evolve, we'll be supporting, together with Lloyds, a platform that provides an omni-channel approach, which will give that greater control on the data, and it will have the seamless integrations that can be orchestrated and centrally managed.
Thank you. And Georgie, if I could go to the Lloyds Bank side, from your side, from a client proposition, what do you see are the themes that you'll be focusing on to enhance what has been built here?
Sure, yeah. So in terms of the CardNet proposition, we support new to card right through to highly complex, large payment volumes merchants. And we want to offer a couple of things among very many others, but the key ones being we want to focus on offering greater choice whilst also keeping things simple for these businesses. So when thinking about choice, we want to offer value-adding services that meet the very many different needs for these businesses across the various sectors. And part of building that proposition involves setting up the partnerships, as we have done with QuickServe, to really understand and develop innovative solutions to meet those needs with the help of SMEs, so QuickServe being SME for their product set, in a continually changing and challenging environment. And we want to deliver products that are interconnected. So like Steve said, that merchants are branching out into various channels more so than they ever have before, and to have that control over their data, a simple one place to go and view all of that information from all of those different channels will be really key to growing their business and maintaining sort of their growth as we come out of COVID.
Thanks. And to keep on from the Lloyds Bank client proposition side, Izzy, can I ask the same of you? What client needs do you expect to be focusing on this year?
Yeah, absolutely. So in Gav's session earlier, he did mention the sort of changes in society that we're finding, and Georgina just mentioned a couple of the bits that I was going to touch on as well, which is sort of enhancing that self-serve functionality, sort of enable more proactive banking. So lockdown has kind of forced us in the direction of finding new ways to let our clients enhance their banking experience and kind of take control of what they want to do. So, our cash management and payment platform, Lloyds Bank Gem, kind of allows a lot of our clients already to access their information quickly and easily, tailor reports to their needs, consolidate data from different sources, analyze real-time data for interpretation purposes. So those sorts of activities and the need to do that will continue. So we'll hope to kind of enhance that across all of our online banking platforms to all of our sector clients, and even in branch, so to that end-to-end sort of omni-channel experience for our clients. Also touching on the point that Gav made on our sort of improved payments journey, so creating more seamless, streamlined, sort of secure products for our clients. So Fund by Bank and Pay from Bank being two of our receivables API solutions. That's just kind of the start of what API technology and open banking can offer for us. So through future partnerships and through our product development teams, we continue to find new ways to offer sort of truly contactless and streamlined and seamless products. So you're seeing in Australia and China at the minute that people are paying for their products in shops just using sort of Face ID. That's the kind of direction that we want to continue to go in. And to the point that we spoke about earlier, or Gav raised when he was showing the stats on the screen in regards to sort of cash usage, I guess we all expected cash and checks to continue to diminish as they have been, with, again, COVID kind of pushing us in that direction. But what we found with cash specifically is that whilst it has kind of slowed down, it did kind of creep up, and there is still quite a client need for access to cash. And it doesn't mean that whilst we're focusing on sort of more technological and innovative solutions that, the more traditional payment methods are going to be left behind. So for those of you who joined the EP Awards in November, you would have seen that our iSafe solution won an award for Best Partnership Initiative, which is all about securely storing, depositing cash with sort of real-time value to the client. So I guess those are the key three themes that I wanted to raise.
Thanks. And Andy, I think it was interesting hearing about the impact of Control My Payment. Are there any other areas that you're specifically looking at to continue to make direct debit solutions more flexible and adaptable as we come out of various lockdowns?
Yeah, I mean, of course, everything is changing fast the pace, of course, and just touching on some of the things that everybody else has been talking about. You just need payments and processes and solutions that end to end simply work. both customers and consumers, merchants, they, to some extent, they don't really care what happens in the background. They just want to have a simple solution that processes payments and delivers what the requirements are. And so I think, again, building on the Control My Payment success, we really need to look at how we can engage more and have more of that interactive approach, with merchants across the payers as well. Even though direct debit, again, as I alluded to, is a proven and embedded payment method across the UK, we see the open banking play as something that we can sort of put together and join up and so forth to enhance the overall solution. So it's kind of almost bringing both of those payment opportunities, direct debit with open banking as a sort of final solution. And then, of course, really, it is about real-time processing, and I think as we move forward and offer our customers better solutions and so forth and become more flexible, it is expanding on our APIs and obviously communicating and setting up partnerships with other PSPs and so forth that are insisting on that real-time processing. I think we've become an impatient sort, as Tony probably alluded to too. Things are moving to now. That's what we all expect, whether it's through a mobile app or whether it's through an online web portal or e-commerce platform. We want it today. So I think it's that customer engagement and those interactive solutions that we'll be focusing on.
Brilliant. Thank you very much. Well, I suppose it would be remiss of us if we didn't talk to the theme of partnerships and what everybody has experienced or learned from this. So first of all, can I ask Steve and Andy, Steve, maybe to you first, what has been your experience of this client proposition co-creation process with Lloyds, and how does it compare with maybe some of the other partners that you've worked with? Yeah, sure. So firstly, I have to say it is an absolutely, and I hope Georgie agrees, it is a fantastic partnership. And it's initiated quite some time ago. We started the relationship back in 2018 when we engaged in a mutual client, and we started the discussions there. But I think for me, two things stand out in the way that we've managed this relationship. And number one is, at that time, we progressed through a very thorough and robust qualification of both parties, which meant that we fully understood the co-creation of the value that both parties brought to the overall proposition. So there was also some clear objectives of what good business looked like. So we understood that the combined proposition of both organizations was very compelling for both our existing customers and net new. So, it was a very robust, thorough start. And then number two for me is, and without embarrassing her too much, the introduction of Georgie meant that we had a key representative, and that meant that we removed all of those bottlenecks and could focus on I call it sales and marketing enablement, but it was enabling the relationship to be able to evolve and refine to a point whereby now, we're able to talk about how we are moving towards Lloyds providing a white label digital service, self-service offering. And, as we've just talked about today, some of these digital innovations and how we can implement those within our platform to extend the joint proposition. Thank you. And Andy, you talked about the kind of the co-creation journey and how it started with Gav, but what has your experience been of building out the proposition and the experience with Lloyds Bank? Sure. Yes, I mean, I think a little bit different than Steve and Georgina's journey in terms of scoping out the potential proposition and where you wanted to go with it to ensure you knew what success meant. It was pretty clear that the SME space in the direct debit area has always been underserved for some time, and so it was really just how do we tap into that, how do we deliver that, and how do we enable the opportunity for SME types of businesses and organizations to accept direct debit. And so, I mean, the experience has been great. Gavin, of course, was very astute at seeing as a large bank
that, for them to be adaptable and flexible and deliver that, partnership was the natural sort of choice to make. And obviously Izzy and Una have been terrific as we've then, moved to the sort of more engagement stage and work very closely at how we are going to be able to put that into the Lloyds portfolio. And I don't think anybody will be alarmed to say that, Lloyds has obviously got its own governance track. It's a regulatory space that we work in. Both sides, are keen to drive the proposition forward, but, we obviously had to go through those sort of processes, and, that's what we have to do. And we work really closely together to deliver that. And Izzy and Una have been, spreading the word, using all the tools internally across the Lloyds sort of internal space, and so forth. And so it's been a great experience, really. I suppose, exceeded my expectations, knowing that, Easy Collect is a fairly small company, compared to the Black Horse, and how we are going to be able to align together and so forth and achieve the success. And so we're getting the traction now and so forth. And I think it's, like everything, we've had several partnerships, probably a dozen or so with ourselves in differing sort of levels. And it's about the communication, taking that proactive approach. You shouldn't take that for granted. It's extremely important. And I think Izzy and Noonan and Gavin, it's been just great from the off and so forth. Sometimes projects can easily get bogged down and you get frustrated, but we've all kept on it and managed to get this through and overcame, any hurdles. Of course, COVID hasn't helped. Priorities have shifted. We're all just trying to support and help merchants and customers. So, we've managed to do it in quite a difficult environment. And I think we're now at that point where we've got the proposition in play. It's being marketed across the group and through ourselves. And at the end of the day, we want to drive revenues that we expected to forecast. And I think that's where we're at. So it has really been excellent.
Thank you so much. And then I think to close, at least for this piece of the panel, Georgie and Izzy, last year at this forum, we talked to, Lloyds Bank spoke to our approach of identifying partners and meeting needs and identifying what need or pain we're trying to address. What has your been experience and learning from this partnership process been, as opposed to just building something internally? Maybe if we could go to Georgie first.
Yeah, sure. So conducting market scanning and engaging with SMEs and fintechs is one of the best parts of a product manager's role, and building that relationship with SMEs, innovative partners who have really thought about a solution to meet a customer's need, and then can support us in being able to deliver that value to our customers, and taking us through the growth process of getting to know the product, identifying a customer's need for that product, and really sort of developing the servicing requirements around it. All of those kind of processes and all of that learning really does take a few months. And as we're so focused on doing the right thing for our customers and for the bank and for our partners, we do take the sort of time necessary to really understand that partnership, where it adds value, and then how we can then go and service our customers, as well as mitigating risk as those sort of bringing new products result. As Gavin and as Andy and as Steve has mentioned, the governance can sometimes be quite lengthy, but this supports the sort of thinking and really challenges both parties to build a really secure, robust and strong proposition. And it's been absolutely fantastic to work with QuickServe and Steve, and growing through what we've initially engaged on as a sort of referral arrangement, and then building into, as Steve said, that white labeled proposition. I mean, it's very, very exciting, and the ability to deliver it at remarkably pace is really good.
Great. And then Izzy, over to you. What has your experience been of the process and learnings from it?
Yeah, absolutely. So I guess the best way to describe this is if you asked me this time last year, could I imagine working from my kitchen or my living room and being introduced to a completely new company and Andy and his brilliant team, I would have probably told you there's no chance this is going to happen. I don't see how we're going to get this over the line. But I'm really pleased to say that we're all here kind of talking about the benefits that we're now offering our clients as a result of this partnership. Yep, governance has definitely been one of the hurdles that we've all overcome. So I'm glad that we're smiling at the sort of other side of it. But it just means that kind of crossing those barriers is just another way to keep our clients safe and secure whilst we offer them the kind of best product proposition that we can. And with working with Andy and the team, I'm sad I still haven't been able to meet them face to face yet, but maybe later this year we'll have the opportunity. But we've still got lots in plan to kind of further expand this partnership across SME and our business banking clients, hopefully. So I'm really looking forward to seeing where this sort of future relationship takes us. So this is just the beginning for Lloyds Bank and Easy Collect, I think.
Brilliant. Thanks so much. Well, thanks again to our panel for talking through those. Hopefully it's given you, our audience, a flavour of what we feel are two great partnership journeys. But now I'd love to, we have a couple of questions here to peruse in the Q&A, but please do feel free to post any more questions you may have for any of the panelists or indeed Gav. So let's have a look. We're certainly seeing it would be useful to, I think, as Gav mentioned in the question raised with him, for your thoughts on the future of the cheque. I mean, we've talked through obviously a direct debit and card usage here. Do we still see that? Do any of you have thoughts on the future of cheques? Do we still see there's a requirement for maybe those who are less digitally aware? Do we think that cheques will still find a place in the future? Maybe I could pick.
So from our experience, I know this is from a digital background, but
yeah,
we're really seeing a big decline. It's funny enough, I was actually sent a check from one of my elderly relatives just recently, but using checks in the environments that we're in has dramatically reduced. And in fact, digital transactions are up in the 80 to 90% in some locations in an on-premise environment. So it's only going one way as far as we can see.
Yeah, absolutely. I'd mirror that as well, Una. So you would have seen the stats that Gav shared earlier, which showed kind of cash and cheque diminishing quite rapidly last year. And whilst cash kind of did begin to creep up, cheque just sort of remains plateau or continues to decline. So whilst we'll continue to serve our clients in that space, it's definitely something that we can imagine sort of starting to evaporate in the near future.
True. And another question that was posed to Gav, but we were keen to get the panel's views from Robert of the Jamie Dimon point of his said that digital payments is the battleground for banks to survive, and that he's petrified of fintechs. It'd be interesting to get a panel viewpoint of what, well, I suppose first of all to Georgie and Izzy, what we think banks can bring to differentiate themselves, but also maybe the view from Steve and Andy after that, in terms of, is it the battleground for banks to survive?
Yeah, so I guess Gavin touched on it in his presentation in terms of, we're open to admit that we've got part of our proposition that we can learn from other competitors and definitely from our partners. Absolutely, I think a little bit to what Andy said in terms of the brand value and what we look to deliver as Lloyds Bank in terms of trust, customer service and value. That those things will still hold weight. And I think part of what is so great about this session and what we've been doing over the last 2 years with QuickServe and Izzy with Easy Collect is that we're willing to partner and learn from best in class. And I think that means that there's certainly a long way to go for Lloyds Bank, but also we're open to feedback from customers.
Yeah, exactly. And just to add to that point, I'm not sure if it's the same article, but I read something very similar from Jamie Dimon last week, which was on the fact that he believes JPM should be very afraid of fintechs, which I thought was quite an interesting sort of statement to make, because we're only seeing the benefits of partnering with fintechs. You know, it's just an opportunity for us to learn new ways to sort of offer different sort of payment abilities and solutions to our clients. So from Lloyds Bank perspective, and I'm sure Georgie will agree, as will Gav, this is kind of only beneficial for us to continue learning and sort of servicing our clients the best way we can.
Steve, Andy, any thoughts on the Jamie Dimon view?
Yeah, I think from our perspective, I think Georgie is very right. There's a lot of weight in brand exposure, but from our perspective, we also look at driving frictionless journeys. So those experiences, those consumer experiences, have got to be seamless, and the consumers will drive that experience because they'll be more and more used to it as those habits are forming. So we'll bring that to the relationship and work with Lloyds to provide those seamless transitions to the open banking as it starts to come into market.
I think all I was going to add there, everybody has touched on, you know, that's certainly the direction of travel, but as Gavin's statistics bore out, I mean, this sort of industry set of participants here today will certainly be aware of open banking, but your average person on the street isn't necessarily aware of open banking yet. You look at the open banking statistics and how that volume is increasing, doubling. I think Gavin said every 8 to 10 weeks, and people don't even realize it. We're making banking payments on our online banking portals, and it's all coming into play, and it's utilizing that technology, and we just don't realize it. And so I think, as Stephen said, these propositions will start to play out to bear, and because we're going to need to deliver to those consumers that are going to expect it. And so, yes, I think the battleground for banks is certainly in that digital space, in making things happen, and obviously improving those efficiencies, and simplifying everything, as we had said before.
Thank you. And then I suppose to the other side of it, we've talked a lot here about digital solutions and fintechs, but we've got a great question here about propositions, maybe one for you, Gav, how we've evolved our propositions to account for financial exclusion caused by the pandemic, or our brand's response to the pandemic.
Yeah, so I mean, I tried to pick that one up, in the at the end of my session regarding the evolved propositions, but there's a really juicy one there about Lloyds closing 151 branches and a further 56 between April and October 2020. So that's impacting access to cash, and how are you continuing to serve customers? I mean, look, there's no doubt that even in the years prior to 2020, we were seeing consumers and businesses increasingly take up digital financial services. When I look at the figures for branch visits and the transactions that are undertaken in branches, a bit like the societal use of cash and checks, they are only going in one direction, and that's an effect that has been accelerated by the pandemic and the necessary lockdowns. There was a question earlier actually about, what is there any demographic bias on the impact of the pandemic? And interestingly, the group that was most quick in signing on to digital banking for the first time, and in fact ordering groceries online for delivery for the first time during the pandemic, was actually the over 60s. For the first time since we've had digital banking propositions, we saw more over 60s register in a month than we did millennials and the under 40s. So that switch to digital is is something that we can't really control, and I think is to a certain extent is an unstoppable momentum. Having said that, we continue to have and will continue to have the largest branch network in the UK of any bank. And in my own team, I can see Izzy smiling here, because a lot of the work that we do in my team is to innovate and create the alternatives to using the branch when customers no longer want to use it. So, you know, having shared resources with other banks is one way to do that. There's a great innovation by a firm up in Scotland called One Banks that are looking to promote the idea of shared financial services hubs, and things like for our business customers, you know, putting on security carrier runs, or giving them what we call iSafes, so safes that they can put in their premises, and when they feed cash into the iSafe, actually it pings a message to us to tell us, and we then credit their account, and we then go and collect the cash from the machine when it reaches about 80% full. So, you know, I think the switch to digital has reached a sort of unstoppable momentum, driven on to a large extent by what we've seen during the pandemic. Our response is to, you know, be there for our customers in the places that it makes most sense to be, and where we're not there, to create those alternatives to allow customers to still access cash where they need it.
Brilliant. While we have you there, Gav, there was also the question around, we were talking about charging, which is quite topical in some of the work we're doing now, are the fees that we're seeing on cross-border payments into the EU SEPA or non-SEPA?
Yeah, so let me just to explain, what we're seeing on payments going into Europe, you know, account-to-account payments going into Europe from the UK, and as many of you will have seen, MasterCard announced yesterday that the UK will be treated as a non-EU entity, non-EU country, as it is now, of course, for the purposes of interchange. So what that potentially leads to is, when payments and card payments are made from UK citizens and arriving with an EU citizen or an EU merchant, they are charged in the same way as if they had come from North America or Asia or Africa or anywhere else outside the EU. So I think that's just an early impact, and you know, one of the areas where, because the UK is no longer in the EU, we may not be treated like we are in the EU. And I think interchange charges from MasterCard and Spanish banks in the main charging for inward payments from the UK to Spain are two of the early areas where we're seeing that reality playing out. I think the question that was asked was about whether we were seeing that on SEPA or non-SEPA payments. Yep. It's a really, really good question. We are, in fact, seeing it on both types of payments. So we're seeing it on the Target 2 payments that we send into the EU, because Lloyds is still a member of Target 2. We're also seeing it on the SEPA payments that we send into the EU under our membership of SEPA. So yes, it's on all of the main payment types going into the Eurozone.
Super. Then there was one last question. I don't know, Georgie, if you had a view on it from a business perspective, that the interchange fees are still something that makes card-based real-time solutions less appealing to the smaller business segment, as well as looking after fraud. Would we have anything to on those two, both the interchange fees and interchange fees and fraud?
Yeah, so there's obviously card acquiring is a fairly complex pricing model, and certainly some of the products that we're looking to deliver from a CardNet perspective, and some of our very well-known fintech competitors like to keep things simple and charge a flat rate for some card types. Often we try and keep it conversely more complex, because actually you can offer more value by giving them more choice or more options for those car payments. So I think, we try and keep transparent with our customers and help them make those decisions that are right for them as a business, certainly across any of the car payment channels that we offer, but also, helping them understand where cost comes in. And then, those merchants can make the decision whether taking cash into branch versus taking car payments is of better value for them. And in terms of fraud, certainly when you're looking at e-com and the rise, certainly within the COVID times of fraud, we've got tools that support merchants, and clearly we support them as and when they experience that.
Thanks, Georgie. Appreciate we didn't get to all of the questions. There's been a couple around the data and timing of faster payments and what we're seeing there. So we will be sharing the slides afterwards, and we'll see what questions we can get to afterwards. But in light of time and it being 3:25, I'd like to thank all of our panel, Andy, Izzy, Steve and Georgie, and hand back to Tony to close.
Thank you very much indeed. What a terrific set of contributions from the panel. Always sit here listening in and thinking of the wisdom of people who are out there actually in the field doing good work where the rubber hits the road. And I commend you, because innovation doesn't happen in a vacuum. It requires people to get off their comfortable sofas and get out and do stuff together, and it's fantastic. I must say, the thing that was quite interesting I observed from these stories about collaboration was it wasn't just about the fact that these were doing things that wouldn't have otherwise have happened. It was the fact that they were done quicker, faster, more efficiently, apparently more profitably, and it looked as if it was good fun too. So for all those reasons, I think it says to me that collaboration is a good thing, and with the panelists here being the people who are walking the talk, I recommend and commend to the whole audience that they follow through with that, so and do similar sort of things. So thank you to Lloyds for hosting this session. Thank you to you, the audience, for sticking with it to the end. Thank you very much to the panelists, of course, and of course to our lead contributor, Gavin, for doing such a great job of setting the scene so formally, so informatively and entertainingly at the beginning. Thank you very much indeed. Thanks for the session.
Thank you, Tony, and thank to all of our speakers, and thank you, of course, to everyone attending today's webinar. If you have any other question, please contact amy.page@emergingpayments.org. You will shortly be receiving a survey on the webinar, and we will appreciate if you could complete these and provide your feedback. You will also receive a follow-up email within 24 to 48 hours with a link to view a recording of today's webinar. On behalf of the Emerging Payments Association and our speaker, thank you for joining us today. Have a great rest of the day.